The price of Bitcoin, BTC, has dropped sharply over recent months, thanks to major turbulence in cryptocurrency markets. BTC began trading lower from the $28,000 to $32,000 range that it held in mid-May, falling to a 52-week low on June 18, when Bitcoin bottomed to $17,708. The drop followed news of several crypto companies facing a liquidity crunch. Adding to the pile of crypto firm insolvencies, it was reported around June 16 to 17 that Three Arrows Capital, 3AC, a Singapore-based crypto hedge fund, was insolvent. On June 27, Three Arrows Capital, 3AC, defaulted on a loan from Voyager Digital. The loan was worth about $350 million in crypto assets and comprised of USD Coin, USDC, and roughly 15,250 BTC. The series of liquidations from crypto lenders such as BlockFi, Voyager and Celsius spelled disaster for 3AC, sending the firm into bankruptcy. Bitcoin prices are now down nearly 56% year-to-date, trading well off their all-time highs of around $69,000 in November 2021. Experts also say that BTC is no longer viewed as an inflation hedge, trading in lockstep with equities, which are also in a downturn. Celsius, a decentralized finance, DeFi, platform and one of the largest crypto lenders, was a big source of negative Bitcoin market sentiment in mid-June. The company takes crypto deposits and loans them out to other investors and financial institutions in a process analogous to conventional bank lending. Users earn yield from the revenue Celsius generates from crypto borrowers. In June, the company stopped disclosing its total AUM on its website. Bitcoin ended 2021 up nearly 70%. In 2022, investors are in a risk-off mood, embracing a general flight to safety across the board in most asset classes, said Alex Refit, co-founder of wealth management firm East Paces Group. One reason is the Federal Reserve, which has already raised interest rates 3 times this year and is poised to raise them again in July. Just how many hikes remain is unclear, but analysts expect the central bank to keep raising rates through the end of the year and into 2023. When the Fed raises interest rates, it lessens demands for more growth companies, like tech stocks, and speculative risk assets, like cryptocurrencies and Bitcoin. We have no historical precedent for how Bitcoin and other cryptos might act if we enter a sustained period when central banks actively drain liquidity, said Interactive Brokers chief strategist Steve Sosnick. Risk assets are investments that experience a significant amount of volatility in the usual course of the market. Stocks, commodities, high-yield bonds, currencies, and Bitcoin are risk assets because you can expect their prices to move up and down frequently under almost any market conditions. Until recently, Bitcoin was considered a store of value that was somewhat immune to fluctuations in the value of risk assets. Today, Bitcoin and the broader crypto market are influenced by economic phenomena that move the importance of risk assets like inflation, stock markets, and Fed monetary policy. Experienced Bitcoin traders are no strangers to bear markets. But that was before major corporations, like Fidelity and PayPal, invested billions in getting into the crypto game. Fledgling crypto owners should know how much nerve is required to stick with Bitcoin over